So I'm just getting set up here in a pro trading room. Gonna mute my audio and echo. Okay, recording light is on. Mic light is lit. If you are in pro trading room, can everybody see my screen okay? I'm in the pro trading room, penny room. Awesome. Okay. I like structure. Yeah. I'm the same way. You know, I need stuff very structured. Um, but it's like it's so rigid all week. Sometimes it's nice just to BS around some ideas on Saturday mornings, you know? But okay, let's see here. We'll give everybody about 5 minutes to mill in. People are usually late. Oh, I'm gonna have a drink of my coffee here. I'm gonna give you just a quick idea where my head's at for the day. Got about 6 people in here, and yeah, about 6 in the penny room as well. Perfect. Um, so when you talk to somebody about trading, if you say I'm a trader, or you know, uh, I trade stocks or this or that, people say, "Well, what do you trade?" Oh, no, you don't have to. Diane. No, not go share my charts. That way, if you have questions on a chart or a setup, I can quickly pull it up and we can go over kind of what the play was, or maybe what someone had missed or stuff like that. So, but yeah, when you're talking to somebody about trading and someone asks you, well, what do you trade? Or, what's your play? Or what's your, if you're talking to another trader, well, what are some of your playbooks? If you can't tell somebody right off the bat what exactly you trade or your setup in a few sentences, then you most likely don't have a well-defined setup. Um, if someone asks me, what do you trade? I say I trade low float, small cap stocks, mostly momentum names. I'm a reversal trader, meaning I look to buy low and sell high. And I like to take advantage of opportunities where people profit take, and I can find structural support on previous VWAP levels on the 180-day 4-hour chart, and take advantage of that on an intraday scale through either ABCD setups, V-shaped reversals, or what we're going to talk about today, J-hook breakouts. So that was about 30 seconds, and I explained my full gamut of trading. Now, if you don't know trading, you probably don't know what the heck I just said. You have no idea, right? You're like, if you're some mom at the school, and I talk to or other dads at the school, what do you do? Well, uh, yeah, right, exactly. And I was just talking to another dad the other day at the school, and he's like, "What have you been doing? You been doing this trading stuff?" And I was like, "Yeah, helping people in a room called Bullish Bears, and I teach them how to. I don't teach them. I'm not their teacher, but I'm a moderator in the room, and I help them with momentum setups." And he just kind of looked at me blank. I was like, buy and sell stocks in the same day, micro movements and macro trends. And he still looked at me somewhat blank. And I was just like, I help people learn how to trade. And he goes, okay, cool. Yeah. He had no idea what I was talking about. But if I sit and talk to another trader, or if you meet somebody that is experienced, uh, you'll want to be able to explain that to them. And for yourself, you need to have a defined setup, something that works in all markets. Or if it doesn't work in all markets, you know what the statistics are and when it's not working, so you can therefore shift in a changing market and not get chopped up. What is that something I talked about just the other day? If someone asked what you do for a living, what do you say? I just say I've been a tattoo artist for 20 years and I trade. So I keep it very simple, very surface with people that I don't know. You know, I'm not I'm a chatty Cathy on here because I'm interested in trading and I love it and it's my passion. But in public, I'm a very quiet person. I don't I if I'm like the guy that kind of like waves high with his head down a little bit and like keeps walking because I've just always kept to myself, very quiet. So, anyways, we'll give it a minute here. 8 people in here now. Okay, cool, small group, but it's good. So I'm gonna take a sip of my coffee real quick, and then if anybody has questions about some setups this week or any plays that they did that they might want to go over, now's the time. I'm gonna give the first, I don't know, 10, 15 minutes to open questions or just any questions in general. If I can answer them, I will. Diane, I know that you had said we've used some terms that you're not really sure of. So if you have any questions, now's the time to ask them, and then we will get into the data mining aspect of it. I'm going to take a sip of my coffee real quick. So overall market this week, man, everything all-time highs again. I love it. It's we're coming into my favorite type of market, the pullback of all-time highs and then hopefully, pull back, test the range and go. And that really can spark some giant momentum. That was basically the breakout here. Go, pull back, test and spy all this previous support, and then really pop up, and then we consolidated for a week or so, and now we broke up again. But overall, market's doing great right now. The Fed's keeping us at zero. Powell's supposed to speak on 60 Minutes this week, where he already did. I'm not sure. I got to check in with that. So something to keep your eye on. QQQs pushed up to highs and then pulled back a little bit and then double topped right where it was basically the other day. So overall market's doing good right now, which is good for everybody. Tech started to pick up again, and now we just need small caps to get with the game again and get back into some good flowing momentum, and we'll see some good plays come in the penny room. So, Diane, as a newbie, I'm not sure what setup to choose to build my plan around. I have scalped, but this is all new. Also, you use standard deviation a lot. What does that mean? Okay. So the biggest thing, let's see here. When I was starting out, the biggest thing for me was information overload. I am such a learner that I will inhale everything I can get my hands on, and that is a detriment to some people because you get uh, analysis by or paralysis by analysis. You see so many things that you freeze and you just don't know what to trade. That is your problem. Yeah. So the what I did, I am a firm believer that in the beginning you should try everything, right? Try breakouts, try reversal trading down off the bottom, try daily, intraday swing setups, try micro scalping, try it all and see what comes naturally and what feels good. That was, let me, that was reversal trading for me. And specifically reversal trading around this white line at the bottom, which is this is multi-day VWAP, but just VWAP as a whole. VWAP is a tool, and it's the volume weighted average price. And and I just understood it, meaning my mentor teaches a system that is all based around the idea that retail and algorithms all buy in and around volume weighted average price. Uh, because it is just that. It is the average price of either the day, the week, the month, uh, and the algorithms are programmed to buy there, right? And so that just made sense to me. And then I started looking at setups in and around that. Okay, so what do I understand in and around VWAP? What makes sense to me? Do breakouts up and over VWAP make sense? Do reversals like this one right here, this big V-shaped drop right to it, make sense? Or does an ABCD setup that's basing on a 5-minute chart maybe make sense to me? And what made sense to me at first um, is actually a really dangerous play, but it was catching a falling knife. And that's what you see here, kind of. Basically, a hard sell, right? And then you see price start to base out on VWAP, and you see that price start to change in the tape, which is your time and sales. And you see the buyers start to step back in and momentum shift. And that is where I go long down there a lot of times at the bottom on a V-shaped reversal. And then I started looking around, and ABCD setups started really popping themselves out to me everywhere, right? What's a good example of that? ABCD setups is basically what I call the W pattern. And it's where you just see a W in price action. And here we go. Here's one right here. And I just saw them everywhere, you know, and that made sense to me. And what it is, it's a hard sell, right? And then price finds a base. Buyers push it back up near the relative highs, and then it gets pushed down one more time, but buyers establish a higher low right here. And that is where a lot of times I will look to take a position as a starter, and then I'll take profit up here on this push, and then I look for price to flag back to structural support, which could either be these relative highs or VWAP or a price structure in the day. And that's where I'll look to add my full position for continuation. And what I noticed about this setup was that this was really good if it was above VWAP. I saw this, I could see it with my eyes, and I would screenshot every single chart that I traded. And I started seeing, well, okay, if these ABCDs are above VWAP and it does the whole motion and then flags back, I usually see a big run. But the only way I knew that I was seeing that, Diane, is by what we're going to talk about today, which is data mining. And if anybody's ever kept track of something, you'll notice that after a bit, you start to see patterns. And that's exactly what happened with the ABCD. And that quickly overtook my V-shaped reversal strategy. And I added another feather to my quiver, basically. I added another tool to my toolbox. And this eventually became my main setup because I saw it more. I saw that it was more stable than catching a falling knife. The overall win rate, as I tracked it, was better, and the profit to the upside was better. So not only was the risk to reward bigger on the upside, but it's not as dangerous of a play. The downside wasn't as big as it is on a falling knife, where sometimes they just keep selling. And even though you might have the right idea and it bases in a proper spot, you might just get flushed on. And that happened to me this week, and it was a really hard day. I took a really big loss on rice on the first day, I think it was, and they just sold right through me. And so I started noticing the ABCD more, and that is what I gravitated towards. And standard, and you use standard deviation a lot. What does that mean? So the wrap up to what I was just saying is study the patterns, the different videos that Bullish Bears has. And if there's something that sticks out to you, some price action, some pattern that sticks out to you where you see it on multiple different charts, start screenshotting and saving and put it in a file that says ABCD pattern or flag pattern or inverse head and shoulders pattern. I'm on Beth about that one because she calls it out all the time, and she was calling it out. I don't, and maybe she knew that she was seeing them all the time, or maybe she didn't. But I noticed that she was calling them out every day. So I said you should start looking into that more because you're seeing that a lot. And if you see that a lot, then that means that your brain is just clicking with it. So screenshot every single one of those charts, keep them in a file, and then go back and study what they do. Um, for me, an ABCD pattern, if it puts in a lower high, a lower low on C, it will often fail. And you can see that right here, where you've got the A, the B, and then it starts to sell down, and you break the low of A right here, right? You break it right here, and then you get a failed setup. And I wouldn't have known that had I not screenshot a million of them, literally flipped through every single one of them, and kept track of that. Does the pattern form? What time does the pattern form? What volume does it need? And was the pattern above VWAP or below? And did the pattern continue? You know, so um, and going on with Diane's question, I use standard deviation, also use standard deviation a lot. What does that mean? So let me go to a 1 day, 1 minute chart real quick, and I will show you. And I'm going to get to the rest of the questions in just a second, and we will start the data mining. Standard deviation is a measure of extension from the mean. Basically, this cyan line that you see on the right side of my chart that runs through the center has 1, 2, 3 channels above and below each channel or each side, right? And all this tells me is context on the day or the year or the month on extension from the mean. It is statistics. It's the bell theory, the bell curve theory. 99.97% of all price action, every single bit of price action, with the exception of 0.003%, happens within 3 standard deviations of the calculated mean. This is going through and doing math and calculating the full range of the data set that I have on my chart. So this is a 1 day, 1 minute chart. So this means that this has 1 day ago on it. Actually, we're on the weekend. I've got to put it on 2 day because TOS is silly and they don't aggregate data on the weekends unless you add a day. So this is normally this would be a 1 day, 1 minute chart, and this is 1 day ago. And this cyan line gives me the average price, right? And how far from the mean are we? Markets are cyclical. Markets go low to high, right? It's the whole buy low, sell high mentality. A lot of people will use RSI for this, relative strength index, and that measures overbought and oversold with a number and a zero line and an oscillator, right? This is basically giving me that information on the chart. This is my zero line, and this is -1 standard deviation, -2, and -3. If I give me 1 second here, and I will show you. Penny room, no problem. So if you're looking at this, this is a standard bell curve, and this works for everything. This works in job promotions when they are figuring out your pay scale. This works for defining averages and testing. This is all throughout the world. They use standard deviation measurement. And within one standard deviation, 68% of price action happens. Um, within two standard deviations, 95% of all price action happens. And within three, 99.7% of all price action happens. And me being a reversal trader looking to buy low, sell high, or look for weakness on the top and short down, right? I use standard deviation as a gauge or a context tool to show me that right here. Oops, sorry. Right here, price is extended all the way down to negative third standard deviation at the end of the day. And if buyers step in right here with volume, I can imagine that we're going to get a push back towards the mean. Now, if I was looking at this on that day, I would take that play. A lot of people, that stock looks weak. They've sold all day, right? They've just made lower lows all day. But I see that as an opportunity to take a long trade back towards either A, the volume weighted average price, which is right here, this white and red line. And once we get to it, it flips white, which shows me that trend is now building to the upside. And then we get continuation over the standard deviation, the linear regression trend, the mean, and it ends the day sitting directly on the average. So that's what I use that for. And I use that on the 1 day, 1 minute, and the 180 day, 4 hour chart. 180 day, 4 hour chart is a more granular view. Let me take off this. Is a more granular view of the daily chart, right? It's just your day split up into a couple candles instead of one daily candle. And I can see how price interacts. Now look at this area right here, actually, boom, where price gets up and over the mean and the 180 day, 4 hour VWAP, which is the volume weighted average price. And then it fails, rejects to get back over, and then sells down to -1. And then they find buyers right there and get a really strong push up and out of the third standard deviation. And we know that almost all price action happens within. So if I'm a short trader at the top of this day, I'm going to go short and I'm just going to sit back and wait. I'm going to wait for it to fall back to +3 standard deviation. Now, oftentimes, what I will do on momentum stocks, my main play is these momentum stocks get so overextended to the outside that I will look for a reversal at this spot right here, +3 standard deviation. So if we take a box tool, and remember, this is the 180 day, 4 hour chart. So each candle is 4 hours, right? If I take a box and I box out that third standard deviation, that half deviation, and this -2 deviation, oops, right, come on, stop sticking. Right there. If we went back, what date is that? The March 3rd. If we went back to March 3rd and I went to a 1 minute chart, what I could tell you is that price probably bounced somewhere right there. Even though it looks like price went straight through it on the 4 hour, there's probably somewhere in there where price bounced. And let's see here. And I'm just going to show this quick and then I'm going to move on. And there we go, boom. So right off the bell, you get heavy, heavy selling, and look at where it bounces from for the reversal. Literally to the tick off of our 4 hour +3 standard deviation mark. That box that I just put on that top line, boom, right off of it. So I would take that long off of that 4 hour longer time frame price structure back towards VWAP. And I would scalp that from $30.18. So we've got it near the whole dollar mark up to 33.43. So that's a $3 move per share that I would get off of that move right there. So That's how I use standard deviation. So let's look at the rest of the questions real quick. 60 minutes more than okay. How many days does multi-day mean? How, Tony, multi-day is just an easy term for however many days you would like. When I'm using a 1 day, 1 minute chart, multi-day means yesterday. So that is previous day's VWAP. If I'm using a 5 day chart, 5 day, 5 minutes, that is the VWAP of 4 days ago. So it's today and 4 days ago. Z-Way, I've been part of Bullish Bears now. I've learned a ton, like to trade momentum, bull flag, flat top breakouts, etc. So that's great outliers. Z-Way or Z-Way, psychology is definitely the hardest part. And what we're going to talk about today, which is data mining, definitely helps in that because having a structured system takes a lot of the emotional aspect out of it because it's just as simple as that. If it doesn't meet your structure and your system, then you don't trade it. If it doesn't meet the criteria that your data set is set forth, then there's no reason to trade it. And I'm guilty of that. The last 2 weeks, I've taken a lot of trades that were either B minuses or C's, not really my setups because the market hasn't been in my favor, like hasn't been very favorable for my setups in the last week and a half, 2 weeks. So I've just taken stuff that I thought was good, and it's been really hard mentally on me. And so that doesn't go away, but it gets easier with a data set and with um, an idea and a system of what you're looking to do. Holy bell curve works for pretty much everything in life. Amen. It does. Yes, I live and breathe bell curve. How many times have you shown this? It still blows my mind. Yeah, Ricky, it does. You know what, man? It That's the beautiful thing about that system. I've never seen it not work. Never. Not once, dude. Every single time it bounces off a deviation. You know what I mean? Like, it's just crazy. Um, so what I was doing for a long time, my system originally was built around multiple day VWAP, right? So I would look for that same setup, right? The 180-day 4-hour reversal, but I would not use the standard deviation. I would just use the 180-day VWAP, and I would look for the reversal there. And that worked really great. Or I would use interplay between previous day or weekly VWAP and intraday VWAP, where this would be an example of that right here. So you've got multi-day VWAP above us and intraday VWAP below, right here, that magenta and yellow line. I would look for a price to overtake VWAP, come back and test it and hold, and then I would take that small micro movement up to multi-day and look for the pop up and over and possibly continuation, but pretty much exactly what it's doing right there. I quickly learned that multi-day, if above intraday, is usually their target. It's usually their final destination, not a pit stop, right? So I would see the price started to break down from there a lot. And so that's when I started searching for a larger system that still gave me the same pinpoint accuracy, um, but uh, but I wanted to keep multi-day involved in that, whether it be 180-day, previous day, weekly, because I still firmly believe that algorithms are programmed to buy at those historical levels. And that's why I've spent so much time making that historical VWAP indicator that you guys have heard me drone on and on and on about, right? Because it just, I mean, let me change the color on it real quick. It works, you know, it's just that simple. And this is still in testing right now. My mentor and I have been working on this nonstop. I've got a call later on today with him to refine it a little bit more. You'll see a grid-like structure on my chart, and those are historical VWAPs. This magenta line that runs, everything is magenta and cyan. When price is above that line, it turns cyan. When price is below, it is magenta. But I mean, look at right here. Look at price. I mean, I'm pointing at my screen right now because that's how much I want you to see it. Price just stops dead at that 2265, which is a VWAP from a week ago. It's not even anywhere relatively close. And I've seen that happen time and time again where price will just dead stop at an old VWAP from a month ago or, you know, uh, 30 days ago or 5 days ago or 20 days ago. If I go to a 20-day 1 hour, look at the interplay of price in and between the grid, look at the hourly chart or the hourly candle that just stops on the dime at 22.15 on RKT and reverses to the upside and stops on a dime at the VWAPs past above that. So, I mean, if you took that reversal right there off of 22.15, given intraday price structure supported it, you took that reversal right there and your target was 22.65, that's a 50-cent move per share. And that's pretty good. So yeah, all of that leads me to the data set and data mining, which is I would know none of this. No, I wouldn't know any of this info had I not started to track data and setups I see in Excel in a very rudimentary, simple way, because I'm like a caveman when it comes to Excel. I am not good at it, but I'm good enough to track the basic details of what I need to form a complete system, right? So, and that's what we're going to talk about today. And that is kind of a good gateway into it. So I'm going to take a second and take a drink of my coffee, pull up Excel. Hey, Tony, how you doing, buddy? I'm going to pull up Excel and kind of our bullet points today, and then we're going to get going with a fresh sheet. If you guys have Excel and you want to join along, feel free. Or you can do it in Google Docs, or you could do it as simple. I'm not, and this is not even a joke. You take a notepad and a piece of paper and just write out columns, and you can keep track of it that way. This does not, I cannot stress this enough. I have zero fancy formulas or Excel calculations in my sheet. This is the basic of basic info, and it has given me enough info and power to create profitable systems out of it. So it does not have to be complex, okay? And I just can't stress that enough, because a lot of people are intimidated by data tracking because they think it's so crazy. Does Evernote have an accept? Man, that's a great question, Hala, because I would rather use Evernote, honestly. Uh, they might, yeah. You could just look through the templates if you have that. Give me 1 second, okay? Let's see here. Let me minimize this real quick. We'll look in Evernote real fast, see what they have. Um, Here, while I'm here, Diane, I'll share this real quick. This is my playbook for my earnings reversal. Yeah, you guys can use google.com spreadsheets. This is just a very, so that playbook, Diane, is basically what we're going to go over today. And that is what you're looking to form out of data mining, right? So you're looking to collect data, which literally means looking at all the stock info and what the chart did that day. And you're literally screenshotting the chart. And you're collecting all that data in order to build a playbook. And a playbook is just a very simple explanation or an in-depth explanation, whatever you'd like, of the setup and how you're going to attack that. So it's written out in a structured form so you can read it, memorize it, and have it to refer to. And then you simply, I mean, you can have it as simple as a note card in front of you on your laptop. Steps one through 5. How do I enter this trade? What am I looking for? On this specific setup, I'm looking for, oh, there we go. I'm looking for an ABC setup with a higher low, either above multi-day, off of a stock that has reported earnings and either gapped up or sold off. I'm looking for that sell-off off the bell, right? And between 9 and 11, I'm looking for an ABCD to build off of multi-day or intraday VWAP, looking for it to test VWAP or multi-day, pull back, put in a higher low. I want to start right there. I want to take profit up here. I want to add to my position on the ABCD that forms over the next VWAP, and then I want to take the whole move up. So you're building into a position. And I just explained that whole entire playbook in about 30 seconds. You know? Yeah, great. Okay, perfect. Yeah, beautiful. So, so that's what we're data mining for, is to build and see what the patterns are and what the repetition is, so we can build a playbook, right? My thesis is that stocks revert to the mean on any time frame. Stocks that gap up will sell off back to long-term volume weighted average price, or with enough volume, they will run higher to the next larger time frame up, VWAP, during price discovery, depending on what manipulators' goals are for the day. When I say manipulator, I just mean whoever's the large hand traders are that day for that stock, right? In small caps specifically, or low float stocks, that is a prevalent issue where large hand traders step in and literally lock the float, meaning they absorb enough of the liquidity that they now are the power in that day's price movement, and they will push the price where they want it to go. So whatever what the manipulator's goals are for the day, stocks that gap down will eventually run back up to the mean with volume and bid support. Or if they've gapped up, they will fall to a long-term VWAP without it. We are taking advantage of the algorithm's dependence on volume weighted average price. They are programmed to buy and sell in and around different time frame VWAPs. We want to capture the move from VWAP to VWAP, from multi-day to intraday, and vice versa, monthly or yearly, etc. The VWAP and the pre-market range are accompanied by the market, the marked out ranges from the hourly and daily chart. That is our roadmap of price action. So that is the whole entire thesis of my playbook. Excuse me. So data mining. Let me pull up Excel. Oh no, we were pulling up Evernote. I got sidetracked there. Sorry. We wanted to look at Evernote real fast to see if they had a template similar. And I just minimized it. What am I doing? Oh man. I don't even know where the templates are. Where are the templates? New note. Template. So do they have an Excel style? Let's see here. Where would that thing? Getting things done? And I'm probably not going to use this today. I'm going to use Excel because that's what I'm used to, but I just want to look real quick through and see if they had something similar. They look like they have a couple that are grid style that would work. And the good thing about the templates in Evernote is that they're completely configurable. So you definitely can change them. Yeah, so I think that you could for sure get by. The only thing that Excel or Google Docs or something like that is gonna have an edge over is analyzing your data and giving you that feedback, and that is huge for me. I really depend heavily on the tables that you can insert with Excel. So let's go ahead and open that up. Is that it? No, that's not it. God, I can never remember which one is. There we go. Okay. Um, so this is a basic formula on the ABCD setup when it's forming, or not a formula. This is a basic spreadsheet on the ABCD setup. When it forms underneath VWAP, I wanted to see what happens when it forms underneath VWAP and for the breakover, basically. This is a setup that I saw another trader doing online that I thought had he's got some valid points. So I wanted to see what the statistics were on that. So I tracked it, and it's great. And I then molded it into a play that I like on low float stocks that are under 20 million shares and have under 5% institutional ownership, that have gapped up on the day, more than 30%, but no more than 70. And what else does it need? More than 20 million volume in pre-market is ideal. And yeah, it's an ABCD setup that forms off of pre-market lows, builds up. My first target usually with it is VWAP intraday, and then I look for the break up and over for continuation. So I wanted to track this specific setup because getting long underneath VWAP can be dangerous sometimes because you're in a seller's market right there, low underneath VWAP, right? Uh, so you want to make sure that you've got stats to back that up. So this is just a basic overview of what my spreadsheets look like. Um, what do I look for? I look for price. I want to know the float, the gap, the short float, the volume today. I'm going to go over this slower. Okay, this is just a quick run of what this has. The volume today, institutional ownership. Has my pattern formed? What time the pattern formed? This is key. Was it above or below VWAP? Did it hold VWAP after the pattern got there? What was the high of daytime? Because that gives you a window to gauge, what time. If I know what the high of daytime is, then I can look forward or look back on that. What normally is the high of daytime, and look for price to start to build towards that. And then this one was huge for me. Extension from entry. If I go to this column, right, and I analyze the data, I just click that button, analyze data, it will give me my average extension from entry. And my average extension, there we go. My most common one was 5.49%. But out of everything, my average extension from entry is 17.42%. So I was stoked. That gives me a good idea for how much above or below, or how much movement up I should get. And then I just lay out simple tables. Can you do way bigger, way more in-depth stuff with Excel? 100%. But I am still new to Excel. I'm really confident in my trading strategy, but man, I have a long way to go with Excel. Tony, you might probably know more than I do, and like that's great. So if anybody has tips or tricks or anything like that, feel free to throw them in today. Yeah, 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 exactly. Yeah, 100%. I think that's great. Yeah, I mean, it's huge. You know what I mean? Like, YouTube's an amazing resource for education for anything, really. So let's make this smaller right now, and then I'm going to give you kind of my broad idea for what we're looking for today. There has been a setup that's been occurring that I have wanted to track. I like entries below VWAP, but inside Bollinger Band on 2-minute charts tends to graph pretty well for scalping. Yeah, I know exactly what you mean. I was using Bollinger Bands very heavily for a long time. Um, so let me show you this pattern that has been setting up here lately, and it played out yesterday on Fubo multiple times. And I have been saying that I want to track it, I want to track it, I'm going to start tracking it, and I just have not made the time to do it yet. So today, that's what we're going to do. We're going to start the spreadsheet that tracks this data. And what it is, it's a 1-minute J-hook break. And J-hook is just a pattern that it could have another name, but I call it a J-hook simply because you can see it right here on the 1-minute chart. It looks like a J, right? You get that sell, and then you get buyer stepping in, and that tight compression right there. It's actually better up here. You get that tight compression right here of price compressing, and then it starts to curl up and off of support, and you get that big blast off. And me being a reversal trader, so is ABCD meant to trade the high day, or are we looking for the highest price in the current trend as confirmation for ABCD? Let me finish what I was saying, Tony, and then we'll go in depth on that. Hold on. So me being a reversal trader, buying breaks to the upside is mentally tough for me because the strategy that I got profitable off of taught you to buy high and sell higher, and it really wrecked me. I lost quite a bit of money doing that because I would constantly get dumped on. I've got a million journal entries where I buy the break higher and I get this. I get just a big giant sell, and there's nothing I can do. I've been trapped in that, been trapped in downside halts, uh, like just getting dumped on all the time. And I got sick of it, so I flipped to reversal trading. And that is buying at support, looking to move higher, right? That is my trade. Buying high and selling higher, or the break higher, or the J hook trade. Getting dumped on. Oh man, yeah, too high. Getting dumped on too high. Um, bro, it's everybody. You know what I mean? It literally is everyone. We all do it. I have literally top ticked a stock and bought it at the high a day. You know what I mean? But it happens so much that there's one or two things that you do. You either finally get so sick of getting dumped on and you want to do this bad enough that you really put in the time to track a different setup and follow how to do that, or the, most people just stop. That's the truth of trading. Is most people don't understand why they're getting dumped on these huge run-ups, and they get frustrated and they just quit. You know, they lose money and they keep losing money, and maybe they'll have a good win one day. Maybe they buy high, maybe they buy this breakup, and then it runs to there and they get a good run, but the next day they buy the top and they get dumped on and they blow up half their account because they freeze. They don't know what to do. So real quick, Tony Canoli, I'm going to answer this and then I want to get into the setup. But so is ABCD meant to trade the high of day, or are we looking for highest price in the current trend as confirmation for ABCD? What do you mean by that, Tony? I don't think I'm really understanding that question because the point in ABCD is buying the low to sell the high. So maybe elaborate or go into a little bit of detail right there because I'm not sure what you're asking. It's going to take me a minute to elaborate. Okay, you can jump on mic if you want, man. It's, so to clarify, the J hook is on a downtrend. It then consolidates shortly and then subsequently explodes. So J hook is well, our definition of downtrend might be different, right? This is a downtrend, right? Where continued selling is you're making lower highs and lower lows, right? I'm looking for price to be in an uptrend. I'm looking for a strong stock. I'm looking for momentum, right? And I'm looking for price to just quickly consolidate to structural support. So if we drew a box right here, we've got these highs over here, right? That are lending support. And this basically this body of selling or this body of price action over here is lending support to this consolidation, and we're looking to join trend on the break of downtrend to the upside, right? And there's a couple different entries. Some people say that you enter on the break of the cup, basically this cup shape. I have a hard time with that, and that is why I want to track this setup, okay? Because to me, buying this, like I said, I don't like to buy high and sell higher. To me, buying the break to the upside here it leaves you exposed, okay? Because if this doesn't continue, then you're going to get dumped on. So my idea is to buy the break of the downtrend here, the angular break on the triangular setup, okay? And that is what I want to track. That is why I'm doing this spreadsheet. So if we change this to white, it's a little bit easier to see. I like angles. I like triangles a lot, you know. I see them all the time. I see pennants and flat wedges and stuff like that. I see that very easily. It's buying a bull flag or a pennant, right? Yeah. So it's basically like a bull flag idea, but it's kind of choppy. You know what I mean? Um, to me personally, a bull flag is very orderly. If I'm buying a bull flag, I don't want to see lower highs and then a higher high and then a higher low and then a lower low. I want to see everything very orderly on the downtrend, on the descent, and then I want to see that tiny little hammer. I want to see a big burst up from there, right? To me, this is more of yeah, it's like a pennant breakout, right? But you get a harder consolidation through here, it feels like to me. And to me, it just looks like a J more. Looks like a J more than it looks like a pennant right there. A pennant would have a matching top and a matching low, and then it gets progressively smaller as it steps, so it would meet that angular line all the way through. There wouldn't be any gaps. So that's what I want to track is, okay, is it safe to get in down here on the angular break, or does it have to be up here? So I'm going to write that down real quick. Angular break or cup break. Okay, angular break or cup break. So this is basically, the reason I'm going through all of this is step one, I've identified a setup or a play that I want to participate in a safe manner with a statistical edge with data and numbers on my side. Okay? There's no way I can do that if I just jump in and out of these willy-nilly whenever I see one. Because if I don't know statistically over the long run, the next 5 to 10 years, that it is, you could have a 10% difference entering on the break of the high versus entering down here. And that could literally be the difference, that little minute difference, that could be the game changer for whether or not this is a profitable strategy over the long run. Just that one candle could change everything. Would it? I don't know. That's why I want to track it. So we've identified the setup that we want to track. Now we need key data about that because we don't know. Is this going to work better in small caps? Is it going to work better in large caps? Does it work better on stocks with a 1 million float or a 100 million float? Stocks that have gapped up, stocks that have gapped down, or stocks that are in a counter trend environment where they're going sideways and you're just going to play a range? Or does it go better on stocks that have a daily breakout? So that is what we're going to start to collect in Excel. So All of this is sparked off of a Twitter post that I saw last night. And the fact that we were tracking, or that we were talking about tracking data yesterday. So let me pull up Benzinga real quick, because that's going to make our life really easy, because all of the info is right there. Benzonga. If you guys don't use Benzinga Pro, this is a paid service. It is amazing. I love it. Has everything consolidated for you right there. We don't need movers. It has all your key stats, basically, right next to the chart with news below it. It's a really great resource. It is a paid service, so it is, if you're just starting or on a tight budget or anything like that, it's definitely not needed. You can find everything you need on finbiz.com for free and all that, but I'm just going to use this because it's all right there for me. So, wholly honestly, if I want to budget for one service, do you have a preference? Man, that's a tough one. I would probably say Benzinga, because it does have the scanners and everything. It has your watch list, which I love the watch list. It has your morning movers, which you can, here, let's show you. I don't want to get too off topic, but you can click it on pre-market for the session. You can have it under 2 billion market cap, and then slide that down to $20, or you could do under 300 million market cap. And then boom, that's every pre-market mover sorted by volume yesterday. You know what I mean? And it shows up right there. Or you can do it for 5 minutes. That's a great part of it. Signals are real time. Boom, these are stocks hitting highs, and you can filter what you want to see. You've got, of course, Charlie on Squawk. He's awesome. He calls out stuff to you real time. And then you've got all all the different workspaces, man. If you want to play earnings reversals, you can play it with this one. Unusual options activity, that's extra, but like 20 bucks extra. Institutional ownership is huge to me, so I look at that all the time, that workspace. Pre-market mover workspace. So this has everything that you could need, but is not as granular as, say, something like Trade Ideas. But Trade Ideas lacks in the news department and the backlog of info on stocks. Trade Ideas is really great for like building an alert window, but not huge on like news and fundamentals and the dirt about the stock. You know what I mean? And then this, boom, if you want to look at the SEC filings, all your SEC filings are right here. You literally just click it and it's right there on the screen. Yeah, Benzinga has everything. I really like it. So, okay, let me catch up with questions real quick, and then we will get into what we're going to track about the setup. Triangles are my shiz. I see them everywhere, especially sitting. Great, perfect. Ironclad. My chart. I don't have as cool chart as you do. It's what works for you. You know what I mean? If we all track this data and then combine it for analysis, we'll have a much bigger data set and we'll be more accurate. Tony, that's actually a really great point. Okay, so there we go. So we've identified the J-hook setup. That's what we're going to track, right? J-hook setup. And so I'm going to go into Excel. And turn on autosave. I have done this before, done a full spreadsheet and then lost the whole thing. I'm going to make sure it auto-saves to my cloud, or else I'm going to be a sad monkey if it breaks, if I lose everything. Okay, so what are we going to do? What do you need to know about a setup? Let's see. I'm sorry, I'm referring to my notes. There we go. Can you use numbers for free, same as Excel? Yes. So first things first, we want to know the ticker, right? Ticker name, right? So I'm going to put that up here in the column. And I usually like, I didn't do it on my last spreadsheet, but I'm going to do it on this one. I'm going to skip a column here. And then I want to know the price. Okay. And then how often in a day does this setup occur? So let's look in. We're going to use Fubo for reference because this setup did happen. So when I'm doing the spreadsheet, I literally have the stock pulled up right next to me. Okay, so we can look. How many times did it set? Or actually, the price. Let's see. Well, I would consider kind of this one, the first one. This is kind of. Yeah, I guess you could. That pen bar, that wick down below. I'm just going to call, let's auto zoom out real quick. I'm going to call this one the first one because this one has that pen bar down through VWAP and it's kind of angular. So that's more of like a flag-ish type setup. So I'm going to call this one the first one right here. So we've got 1, 2, that's kind of a pennant. Let's call it 3. And then that is the back side. Okay, so I'm going to call it 3 times. And the first time started at 2265. So we're going to go ticker, ARC-AT, price, 2265. And then I'm going to go how many times in day at 3, right? Okay, what's next? At what time does this usually occur? That is something that is huge. Timing on these things is everything to me, right? I noticed with my ABCDs that the ABCD setup usually starts forming between ticker ARC-AT, yes. The ABCD usually starts forming between 10 and 11 a.m., right? Oh, geez, put in ARC-AT. Yeah, sorry. I was thinking of ARC-AT still. Sorry, good call, guys. Oh, man, it's been a long week. Sorry. Fubo. Fubo is the ticker. You're correct. Sorry. Um, I noticed that the ABCD started forming between 10 and 11 a.m. every day, right? So timing is huge. So we're going to put time right here. Time of day. And listen, data collecting is arduous and long and a tedious task. But as you start getting used to it and you get a system going, it gets much faster. You get quick at it, you know. So what I like to do for time of day is usually when the first pattern started, because we want to know when it first happens, right? Not the third one at high of day, right? So the first one, I would say, if we were to buy, was that 10 from the high, 1007 to 1017. So let's do. See, this is always stuff too, figuring out new setups. You got to figure, okay, do you want to know when the high happened that then formed it, or do you want to know when the consolidation happens that formed it? I would go, I'm going to go off entry. So let's say for me, I want to do the angled entry. So that's 1016. time of day. There we go. Okay, so then what signal or what so sorry, someone's texting me. Actually, let's go with range. So what would the average range be on that, right? So we've got 2264 to 2354, 2264 to 23, 2265 to 2356. Okay. Got to do math real quick. So 92 cents. So I'm going to put in range of the play, right? And I like to track stuff in cents. The only things you know what, I did average percent last time for extension. Actually, what's actually extension? Extension from entry is what I'm going to write for like the range of that play. I did percent last time, and what I noticed is while it was helpful, in the day, I would be like, my average extension is 17%. And then I'd be like, oh crap. What is 17% of 2560 from 2264? You know, like 2264. Then I would have to do the math and I'd be like, oh, that's annoying. I'm not super fast with percentages, so I'd rather track it in pennies, in actual dollars, you know? So 2264 minus 2365 is 2264 minus 2356 is 92 cents. So almost $1. That's a great move right there on just the first one. 92 cents. So today's class is going to be, I know Excel does the math, but I know, but this is how I do it. So Tony, or actually no, Ricky, there you go, that you can help us. What would the formula be to figure out the percentage? Like when I say I don't know Excel very well, I'm just telling you guys what key points to get from the data set to help you figure it out. But if anyone can help me with Excel, I am all ears. I'm always a student. Yeah. Extension from entry to exit. No, that's fine. I'm just going to do it in cents for now. That's fine. This is what I want to know cents anyways. So yeah. Okay. Yeah, that's no problem. Yeah. I mean, personally, I like dealing in dollars better. So for me, I'm just going to keep it like that because I want to know, like, does it move $2, $3, $4? You know, that's just me though. If someone else deals better with percentage, then we can totally change it or do that. So the next thing I want to know is what signal or indicator, what do I use, whether it be, okay, cool. Yeah, we can add, you guys, if you guys want to add it, feel free. I'm going to keep mine cents. So yeah. What signal or indicator or what do I use that is going to tell me that this is basing or I want it to hold here? You know, is it price structure or am I going to use an indicator for that? Some people use VWAP, some people use moving averages. I use standard deviation. So on this first one, I see it holding standard dev, right? It's holding the linear regression. So what signal is going to mark basically the top and the bottom of this? So what are my targets and my entry signals going to be, right? So I would say if this makes a high right here over standard deviation, over the linear regression trend, and then pulls back and collects at trend and breaks that downtrend over the deviation, then I'm going to target the next deviation, right? Whether it be half or whole. And so that is my personal one. So if you use, would you want to see it on VWAP, or would you want to see it holding a 9 EMA, or maybe the 200, or do you want to see Mace D crossing over right here, and or do you want to see it coming out of Bollinger Bands? You get the idea. So I'm going to write, in mine personally, I'm going to write held dev for held deviation. If so, which deviation? It's going to write in trend. That is that center cyan line. It's the trend of the deviation channel. And and then target. My first target on that setup would have been the half deviation and then +1. So we'll go with that first one. So 0.5 dev. Now I'm literally doing this for myself. So I'm just showing you what data sets I collect. So if you guys want to put different stuff in there, so that could be, if you're using multi-day and intraday VWAP, it could be held VWAP, yes. Target, multi-day VWAP. If it's you're using moving averages and it's below the 50 but above the 200, did it hold 200? Yes. Hit 50? Yes. Or no, right? So I just want to know what defined targets I'm going for, right? Or it could be price action. That could be holding pre-market high. You know what I mean? Like, does it? No, it's underneath it. So, you can use whatever you want. You can use price structure, indicators, whatever it may be. But what trigger or what signal is going to show you, hey, this is holding key support. I should look to participate here. So now we get into the fundamentals of it, right? And that's where Benzinga is going to come up. What do you need to know about the stock? Let's actually make this smaller real quick. And what I look for in a stock is I want to know the float. I want to know the market cap of the stock. Let's see here. Sorry, I'm just getting situated here. Okay, I want to know what the float was. I want to know the market cap of the stock. I want to know the institutional ownership of the stock. And I want to know what the volume was at the time. So those are things I'm going to write in, right? So float, because 100 million stock, 100 million float or a billion float is going to move different than 2 million float. Market cap. Same thing with 100 million market cap or 200 million market cap is going to move much different than a billion market cap. Institutional ownership, I like to know that because high IO percent. What is that, Tony? Now you got me clicking links. Oh yeah, I've tried that before, and I personally did not like that because it's not tailored enough to my strategy. I know what you're doing. I tried that before, and it was, I want to know it's just super specific metrics, so it gave me too much personally. But yes, that is a cool link. I like that. So I'm just for small cap momentum names specifically. Not saying Fubo is a small cap. I'm just using Fubo because it it moved yesterday. So let's pull that up real quick. Yeah, Fubo's 126 million. Fubo just happened to have the J hooks yesterday, so I'm using it as a example. But it could turn out that maybe 100 million stock, 100 million float stock moves smoother and cleaner with this setup than a small cap or a low float does, you know? So that's something I'm going to figure out. 6 point market cap 3.1 billion. IO percent. Now, the reason I want to know institutional ownership, specifically with small cap stocks, I've talked about this at nauseum. Sorry for anybody that's heard it 1,000 times, but on a small cap stock with a low float, if you have a high institutional ownership, you have large money traders in there that can really, really move the stock around and do what they want with it. You more times than not, you will experience immense selling pressure because these guys want to short these gapped up stocks because they know they always return to the mean, right? They know they always go down. So personally, I've found through tracking that under 5% is the best for my strategies. So I want to stick with, or I'm going to write down 9.34%. And then what was the volume that day? I want to know what the volume was. So for that, we've got to go back. Volume was 105 million. 5, 2, oops. Guys bored yet? And then I want to know, personally, I like to keep track of relative volume. No, not bored. Okay, good. Sorry, I'm just pulling up our vol real quick. Oh man, does that not give me the day stats? Ah, geez, that's the stock TOS one. That doesn't give me the stock day. That's weird. Let me look at something real quick. I'm trying to find the RVol. Why does uh well at that point it would be the that's actually a really good question, Diane. You can track both. We could do in the moment, you could notate what the volume is prior to that. Yeah, that's actually a really good point. Yeah, I would. Let's do that actually. Well, I don't have it for this one, but all at set. There we go. Volume at setup, and then RVol next to that. And we're not gonna. Let's see here. Vol at setup. I know I could do it. Give me 1 second. So many things open. Real quick, I'm just looking for a relative volume. Sorry for the dead air. Give me 1 second here. Looking for my relative volume label. And I don't know why it's not on there right there, but actually. RVol 7.41. There we go. Let me log into my trading view real quick. I can probably get the. Actually, you know what? No, better than that, Diane. My Error TV does not show the same volume as you. Oh yeah. Trade yeah, I don't know about Trading View. I do not like their volume. I don't even they don't even tell me if this is wrong, but I don't even see volume straight on the screen. I've always got to open that side tab on Trading View, and I can't stand that about that. Better than volume up till, Diane, would be volume per candle um, on that on the initial thrust up. Basically, I like to see on small caps, I usually like to see 1 million candles. So when you hover over the candle down here in the bottom left, you can see the volume per candle, right? On the trigger bars or on any of the candles, you can just hover over them, the number changes, right? Usually on small caps, I like to see 1 million per. So let's do that. Let's do volume candles. And let's go. See, this is the stuff you got to figure out. Do I want the volume per candle on the thrust bar that just moved up? Or do I want the volume per candle on the entry? You guys got me deep thinking this morning. I would say on the trigger bar. So if I want to, if I enter here, then I want to see follow through with a high volume thrust bar, right? Because if I enter the downtrend here at the break of downtrend 2268, I want to know that that volume has at least 1.5 to 2 times the consolidation volume, which is what our white candle shows us. Okay, so yeah, that could be a rule. I want to only enter on trigger bars, which are my white and cyan candles, which are 1.5 to 2 times X volume per the last, 20 or 60 candles, whatever user has it set. So, okay, that's going to be volume candle and trigger candle, yes or no. Candle volume was 486,791. 486,791. And then trigger candle. Yes, and it was a white one. This is for me personally. You guys aren't gonna, you guys don't have the trigger candles or whatever. And if you do, great. If not, then no big deal. But you can simply just put, candle volume, and you want to, go through, analyze your average on entry. If I'm entering on the break of the downtrend, which would be right here at as you break over the highs right there. I want a 2267. I want to see that volume in that candle be at least X. So this one was 486,791. As you build the data set, you'll find out what the average is for a good push up, right? Okay, so trigger candle, yes, white. RVol, volume, institutional ownership, market cap, float, target, held Dev, which Dev, extension from entry, time of day, how many, price, ticker. Okay. What else do we need to know about it? Are you guys with me? What is the start of the move? I think that candle is better. So what I'm looking at for this move, like I said, the start of the move is this high and then it pulls back, it starts to consolidate and curl, and you start to make higher lows, right? Um, as I'm looking for it, I want this downtrend to be broken and I want it to break the highs right there. So if you do an intersection of a horizontal and an angular line right there, that intersection becomes what I feel would be a safe entry as opposed to the cup break up here. And that's the whole thing of why I want to track this. Like we were talking about earlier, a lot of people say that you enter on the cup, break, and test. But I feel like half the move is gone, you know? So I want to track whether or not it's safe to enter on this trigger bar here, this big thrust bar, um, and what the percentage is. So what else do I have in my notes? Let's go through this. Okay. What's the exit signal for the setup? Um, so if we look at the setup on the right, it really doesn't give us a reason to exit uh, until really up here at the high. When you get the sell, um, let's go. I want to look at a 3-minute chart real quick. Yeah, man, this is super clean all the way up. So should we record the cost difference from the first high to the trigger difference? Mm, no, I mean, what's your thought pattern in that? Tony, you saying that like record this distance because if it falls X amount of distance, then possibly the play is not valid. Is that your idea? Yeah. Um, no, I don't think you really need. I mean, I personally probably wouldn't track it because that's noise in the sheet. I just want to know the core tenets of the play, because that's kind of a visual thing. You know what I mean? If this thing just keeps making lower lows, I could overdo this. Yeah. So you want to keep it detailed, but keep it simple. You want to know the core tenets of the exact play, right? I can visually just see that this thing is making higher lows, and that shows me uh, that it's curling, right? Because you're making lower lows, you start to base out right there a little bit. You know, you make a higher low, and then you kind of pin bar right there, but you start curling, right? You can visually see the curl. So that's not really a thing for me. I get where you're coming from that though. I totally get that. But to me, I like to keep my sheets as focused as possible. Rock could use a fib to record retracement. Yeah, yeah, you could do that, Tony. You could snap like maybe a fib extension or like a fib on the day and say that, usually it retraces from, I don't know, the 618 to the 34, 36, whatever that number is. I don't use fibs a ton, but um, you know, um, yeah, over or average percentage would indicate momentum. Yeah, yeah, you could do whatever you want in it, man. These are just my ideas. I'm doing what I need for mine. I'm showing you what the focus stuff that I keep track of. You know what I mean? Um, So what would be a signal for exit for me would be, let's see here, break a trend really. I like to keep it simple, and if it breaks trend, then I usually start to look to get out. So that could be just as simple as, let's see, oops, I got that extension off. I like to keep in the beginning, Tony, I like to keep everything as simple as possible because you get very overwhelmed already, if you're new to tracking data or tracking setups, you get what we were talking about earlier, analysis paralysis, where why is that still not doing that? Sorry, give me 1 second. You get so much data saved that you don't know what to read, and then you sit there for 20 minutes looking at the play, and by the time you've checked all your data set boxes off, the play's gone. You know what I mean? So um, I just want to know, I want to look at patterns in the data set eventually, so and see what usually happens, and then I can base it off that. So that's about clean enough for me. Yeah, we break trend right here, right down there. Actually, no, that red candle right there closes below. So right there, that would be a reason to exit for me. So I would want to know what that reason is, and this can be whatever you want it to be. You know what I mean? For me, also, I would see that I've just hit. Actually, that would probably be a better reason for me to exit. Let's just write reason for exit. I'm going to write reason for exit, and I'm either going to look for extension outside the third deviation or a trend break. Okay. Uh, oh no, I accidentally deleted a trigger candle. Yes. Okay, there we go. It's back. So I'm going to put, try to keep it short. I'm going to write third dev, and I'm going to keep reason for exit one of two things. I don't want to have like hit the third deviation here, and then down here it hit broke the 9 EMA, and then down here broke the 200 EMA, then down here triple topped failed. I want to have one or two, like A or B. You know what I mean? So in this play, because that's going to be a rule in the playbook later. Did it either extend outside of the third standard deviation or break trend? That is my reason to exit. Because if it broke trend down here, boom, it's not all the way up at 3. I can mark that as a data set, or up here, it double tops at the third standard deviation. That shows me weakness. That's going to be me getting out. Third, so just reason for exit, one of two things, third dev. That's all I'm going to write. So all the way down that column from now on, I'm just going to write what deviation it topped out at, either dev or trend, right? That's it. Okay, what's next on my notes? Sorry, I have all this noted out. Oh, I'm sitting with my legs crossed and I'm trying to uncross them and it's not working. Oh, okay. Time. That is one thing that we did not do. Oh yeah, we did time update. Okay. So now we're on exit, so time of exit. We want to know how long these plays last, right? So for me, that third dev exit would be at 11 a.m., top of the hour. I talk about that at nauseum as well. Guys, if you haven't noticed yet, things in the market happen on the hour, on the 15-minute, on the half hour. They happen at timed intervals a lot of times, not on every stock, but a lot of times it does. So that throughout time, you'll see that, oh, okay, cool. This play starts at 10:30 usually and ends at 11, or starts at 10 and ends at 11:15. There's a 5-minute double bottom bounce off of VWAP that I tracked for a while, and every single day at 8:30 my time, so 11:30 Eastern, it would happen every single day. That single play, I think Tony Canoli, I was talking to you about that play yesterday. Every single day at 11:30 Eastern, I would take that C entry off of intraday VWAP if I could find it, and I would get the run to high a day. There's a solid like 3 months where that play worked every single day, and it was amazing. And then it stopped, just like that. Just one day it wasn't there anymore, and it shifted times. And I knew that it shifted times because I had tracked that. So what's next? Let's see what we've got so far. So we've got reason for exit, trigger candle, exit time, RVol, candle volume, institutional owner, market cap. Oh, okay, here we go. We've got float, right? Okay, so I want to know high a day time and low a day time. LOD time and HOD time. And I want to know when low a day gets put in, so I can look to, so I can know that an average of low a day is around, whatever, 6:45 or 7 a.m. And then I can start looking for this play after that. So that way I know the average low day time, and I'm not worried like, oh, maybe I'm going to get slammed. Maybe I'm going to get dumped on here and they're going to go to low day. And then knowing that average high of day time also helps. High day time, 11:03. And low day time, 9:45. So, I mean, if you take this first entry at 10 o'clock, you're in this play for an hour. You know what I mean? Like 10, 18, 45 minutes. That's a long trade. That's a good trade, You don't have to worry about, I am so sick and tired of having to scalp in and out of 82 moves a day. I'm getting so sick of it. And I see traders that I look up to sitting back and relaxing with a stop in, and they're playing. Now, obviously, it doesn't always pan out like that, but that has been my goal for a while now, is to start scaling into bigger, longer momentum moves where I just have to manage a core position and not have to worry about entering and exiting 22 times. Like we were talking about yesterday, Tony, you were like, oh, you're looking at that as one play, not three separate plays on the ABCD. Like, yes, all the time. I just want to get in and I want to take my profits at the highs, and then I want to re-add around a core when I can. You know, not every play is that way. You're not always going to be able to do that, but when I can, I want to. High day, low day. Is this day 1 or day 2 or 3 in a daily breakout setup or anything like that? Those are good things to know what the daily chart is doing. So this is actually day 3. So that helps in just continuation setup. You know what I mean? Like you could be on day 3 and this thing could be fizzling. So if it is a day 3 setup and you think you're going to get, you know, an hour-long super big momentum trade, you could be sadly mistaken. You know what I mean? Like, so you want to know what day it is in the momentum of the stock, whether it's a daily breakout, stuff like that. So I'm going to go back here. No, that was a down day there. So this is actually, that was a down day too. Why is that daily? Down there. Oh, after hours. Okay. Oh, I'm looking at the wrong section. That's why I'm like, that doesn't even make sense. So this is the first green day. So it had 1, 2 down days, and then this first green day. Day 1 of the move. So that tells me that market conditions daily calendar. What do you mean, Rock? Oh yeah. No, that's the next thing that I was going to touch on. SPY, like SPY cues. Because like as far as like stuff I need to know about the setup, that's pretty much it. There's not a ton to it, you guys. That's what I'm saying. Like, you don't need to be intimidated or like nervous or weird about tracking data. What we've got here is going to be enough to start to build a easy enough data set. So DM move, and then overall market. And I look at SPY for mine, for my market sentiment. And so I just want to know if it's up or down, up, down, sideways. So market was up at all-time highs. Up. That's all I care about. I'm a small cap trader. This just happens to be a larger stock that we're using for a reference, but I'm a small cap trader, so 9 times out of 10, that daily runner that's running 1,000%, not really gonna give a crap about what SPY is doing, honestly, to put it very bluntly. um, you know, SPY's been in the gutter some days, and there's still been 1,000% runners. So while it does matter, I do take it into consideration. It's not the end all be all. I'm not trading Tesla or Amazon or Google. So, um, some people see SPY's down and they freak out and they're looking to trade a 2 million float stock that's got a Twitter following, uh, some chat pumper pumping it, and they think that just because SPY's down, that's going to matter. Like some guy's going to dump a bajillion shares into it and dump on his followers. Um, okay, let's look at this real quick. So we've got our price. We've got how many times in the day it happens, time of day that it happened. Extension from our entry was 92 cents on that first move. Actually, if I'm wanting to stay in this the whole move, our extension for the scalp was 92 cents, but what's the full extension of the move? I'm thinking real quick. Sorry, guys. Actually, no. I'll just do it in the row next to it. I want to know extension from entry for scalp. That's 92. And then I want to know full. So let's see. Where's our entry there? 2270. To 25, 35, 22, 22, 70 minus 25, 35 equals, all right, sorry, 25 minus 22, 70, $2.65. Okay, so held dev, which held the trend on the deviation. Target was the 0.5 dev. Or we can continue the float. We've got that, the market cap, the institutional ownership, the volume on the day, the candle volume for entry. Actually, candle vol on entry. Relative volume on the day, trigger candle, reason for exit, third dev. Exit time, low day, high day, day one move, and overall market. And that's going to be enough for me. I feel like that's a good, solid data set that once we get a couple hundred entries, we can start to see a pattern, right? We can start to know that, okay, this thing's going to work out the best at, 10 a.m., and on a stock that's got 20 million on the day already, 30 million on the day already, and oh, actually, I want to know if there was a gap as well. That's a big one that I personally trade. I usually trade the gappers in the morning, so I want to know what the gap percent was on that day, if there was at all. So I would input the gap percent there, and then go from there. So, did we gap up on that day? Anybody have any input? You guys were real quiet today. Talk with me. Where are you getting the gap percent? I can just measure it on TradingView, Beth, with the ruler tool. If it doesn't, actually, no, I thought I had the gap watch list in there still, but I don't. I've got a gap watch list I'll pull up. Or actually, this should have my gap stats on it. There we go. I've got all the tricks, Beth. I still don't think that tells you daily gap. Previous gap day 12.62, average range $4.40. Wow. Fubo, man. I haven't really traded Fubo that much. I think I might need to. Average gap percent 28%. Average gaps above 20%, 1. Let me sign into TradingView real quick. They've got just a super simple ruler tool that I like to use. What? God, it's being so silly. There we go. So it kind of it didn't really like, sorry, I'm looking at this real quick. Not really too much of there's a tiny gap. Yeah, but it just it ran up after hours. They didn't just gap it up. So it says 0.56%, but it was up after hours and up on the day. You know what I mean? If I measure from the top of that to the bottom of that. Let's see, let's just put how much it was up on the day. From there to open. Remind me of what the 92 scalp was, please. That was if you just entered on the beginning, right? If we just took that scalp right there from the break. Oh my gosh, my magnet's on. The break right here at 22, what was it, 22.68 up to the high, like 23.56. If you just took that move, that was like 92 cents. minus. Oh, it's 88 cents. Jeez, the math wrong. All right. 23.56 minus 87 cents. Jeez. All right, I got 22 things going on. I'm trying to do that, do this. Measure the gap. I'll worry about the gap later. Anyways, so yeah, that is very simple, very rudimentary way for what to collect and how to collect it. So the whole point of this is as we go, and if you screenshot this stuff day in and day out, and just take 5 minutes to enter in some key points like that, after you get a couple hundred of them, you can have a reliable data set that's going to give you, uh, you know, some insights to how to build a play, and then from there, you take, those, for those of you that, sorry, I'm reading a question. For those of you that, I just forgot what I was going to say. For those of you, that, want to build a playbook and want to have a specified strategy, this is a super easy way to take your data points, analyze through, and for those of you that know Excel better and can write the formulas and all of that stuff, I'm in no way, shape, or form saying I'm an Excel expert. We all know that. But if you can write a better formula, that's going to give you more detailed information, then great. But don't overwhelm yourself. You just need the simple stats. That's it. You know what I mean? You don't need 22 formulas. I've built a couple completely profitable strategies just with some very basic data sets. Okay. So don't get too crazy with it. Because you're going to overwhelm yourself and you're going to have too much stuff to deal with and to sift through. And that's another thing too. This is already a tedious task to track all of this. So the more simple you keep it, the easier it will be to stay up with it and to stay consistent with your tracking. Because at the end of the day, if you have lost all of your trades, if you've had a horrible day, you're in an argument with somebody outside of trading, you've had a rough day at your other job, and you come home from your regular work after trading in the morning and then going to work all day, you think you're going to want to sit down and track 22 items? No, you're not. You're going to be frustrated. You're going to be tired. And you're going to say, I'm going to do it tomorrow. And then tomorrow is going to turn into 3 days, and 3 days is going to turn into a month. And then you're just going to forget about the sheet completely. So keep it as simple as possible, but as detailed as possible so that you can extract as much data as you can. That's going to be reliable for the setup over the long run. That's it. That's my spiel. I'm not going to go too much longer on it because we're getting into a couple hour territory here now. So let me go back through chat. I hope this helped, guys. I did share my playbook earlier, and that is the culminated effort of tracking a data set, and then going back and manually, literally one by one, counting each play on a chart and screenshotting them, manually backtesting and backtesting through trade ideas. That is the culmination of that playbook up there. And that all came from manually tracking in Excel. So, okay, let me go back through chat, guys. Actually, let me say goodbye real quick. Someone's sleeping. Give me a second, my girl's sleeping. Oh, she just stepped on my toe with her boots. Oh my God, I just had to mute myself because she just stepped on my toe, my bare foot with her heels. That hurt so bad. She just said, I can't feel it. Sorry. Oh my God. Let me go back through this. Let me go back through the chat. Oh God, that hurts so bad. What is the start of the move? Second entry at cut break. I personally don't like a second. Well, I'm looking at Holy's second entry at cut break question. Sorry, trading. TOS is going slow. Let me shut down. Make sure everything else is shut down. Yeah. Um, no, no, because that's going to drag your average up, and your average is now going to be too close to the cup. And if that cup fails, then you're going to fail. So you might as well just enter on the cup break. What I would rather, Holy, is I personally want to track because I want to enter down here on the downtrend break, then let that play out, take 2/3 profit. And if it does what this did and J hook again, uh, work around that trailer and add back on the downtrend break here, right? And then have full size going into this push towards high day again, personally, taking profit here and here and here. So adding again right at the cup break is just it's gonna drag your average too close to your entry. It's gonna drag it up. So I think until we know the statistics on failure on it, yeah, I mean, if it's got an 80 or 90% success rate, then yeah, maybe. But I still feel like that is too close to your entry to add to. It's gonna really mess your average up. If you're re-adding up here, you've got good enough difference, good enough distance from your entry to your take profit and add that you're probably drag your, depending on what you add back, you'll your average is still going to be below the swing low if you size correctly, you know. So that's really paramount to adding, is that you don't add too close to your entry because you're just gonna keep moving that average up. So okay, I could overdo this. See, that could fib for retracement average percentage. Driving spy. What do you get? Scalp. I have some questions I'm typing up at the end. Don't. Okay. Really do. Recording successful J shape. Are you recording successful J shapes or those that fail? I'm recording every time I see it, Tony. Yes, I want to know failures. 100%. Can't get the other side of the data set if you don't track the failing ones as well. So what I'm looking at for, I guess what you could say I'm recording is I want to enter on the downtrend move, right? Oh, that's too big. I personally want to enter on the downtrend break right here, but I am going to record everything that I see break over the cup, right? So if we've got that J cup section and then it moves higher, starts to move higher, if it fails right here, I'm going to record that. But a lot of times this will pull back right here and then form an ABCD. So I'm going to record everything that I see that has the extension bar out of the downtrend break and then start to a continuation. So, okay, questions for end of session from Diane. What is your preferred float for small caps under 20 million, Diane? Is there a particular time frame that is best for data mining, or is it personal choice? I am personally data mining 1 minute timeframes for this setup because I feel like the 1 minute time frame in this specific setup, you can see more granularity and you can see the setup better on this specifically. But on the ABCD, I rather trade that on a 3 minute because the patterns are cleaner and you don't get as many failures. So it is a personal preference in the end, what time frame you prefer to trade on. If you want to look for these in a 3 or a 5 minute increment, you totally can. A longer time frame is always going to add a little bit more of a structural soundness to the price action. So if you saw this on a 5 minute time frame, you could guarantee that you're probably going to get a pretty strong move to the upside. So could you data mine a larger time set? Absolutely. You're just not going to see as many of them. So for the exercise, being that I'm an intraday scalper for the most part, and I usually trade a 3 minute, I'm going to mine a 1 minute for now because I want to get as much data as I can. And then I'm going to start to build out from that. Once you've determined what pattern you want to data mine, where do you start? Any stock, your watch list, hot stocks of the day. The easiest thing, okay, so step 1, find the pattern that you want to mine. Step 2, start flipping through charts. The best place to look is just, you can look at, the percent gainers for the day is a really good place to start. I'm sure that if I opened my percent gainers list in my left column of TOS in the watch list, that Fubo would be on that percent gainer list, right? Percent change gainer. Fubo's number 1. There you go. So Fubo is number 1 on the percent change gainer in the public watch list on TOS, right there. So that's a public watch list that everybody can use. I sort that by volume because volume is where the money's at, right? If there's no volume, there's no move, period. How do you access standard deviation on chart on TOS? That is an indicator that I personally have coded, and I will share it with you. Can you walk me through VWAP setup? As a trader I was following before, I told me to take it off my chart because I didn't need it. A trader I was following before told me to take it off my chart because I didn't need it. I just want to make sure I have VWAP indicator set up properly. Man, that trader who told you that, don't listen to that dude. So VWAP is, if you talk to any institutional trader, any prop trader, any hedge fund, any 7, 8 figure trader, the broadest, best answer that you hear, like the most common answer that you hear, what indicator do you have on your chart? Most of them will say none or VWAP. VWAP is the calculation of the average price of the day. You need to have that. How do you know if you're overextended if you don't know what the volume weighted average price is? So yeah, there is a stock one that's in TOS, and I can walk you through how to set that up. Yes, I have so many of them that if I shared a ton of them, I would probably overwhelm you. So what I'm going to do is I'm just going to go to a blank chart real quick. We're going to make a blank chart, and I'm going to walk you through setting up TOS's just stock VWAP, because that's the easiest place to start. So if you've got a blank chart on your page, right? You go to the beaker icon, in your search bar next to the studies, you type in VWAP, And then TOS's is just called VWAP. Click that, and you add selected. Boom. Now what that's going to give you off the bat, if you double click it, you can access the settings. And what that's going to give you off the bat, it's going to give you the volume weighted average price for the day, because it's set to a day aggregation. And it's going to give you 2 deviations up and 2 deviations down. What VWAP has is very similar to what the standard deviation channel is, but they're dynamic. And it's going to look like this. The upper band is always this weird pomegranate color, which I don't know why they do, because that's the most important one to me, because I'm a long trader. So that shows me where the overextension is. So I like to change that color. And the lower band, actually, let's change upper band to red, because that tells me danger, we're overextended. And lower band to dark green, because that tells me that, hey, we're down low in the buy cycle. We want to look for movement up and off of this. And I always have my VWAPs yellow. Personally, that's just what I do. So you're going to get something that looks like this, okay? As this goes through, this center line calculates what the volume weighted average price is. So all this is a moving average that is taking volume, the bottom, into account in its calculation. And it's telling you where the volume weighted median is. So 23.93 is the average price of the stock throughout the day, because it's interacted here, 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 all throughout the day, right? Up, you've got 2 standard deviations to the upside. And you can see as we hit those standard deviations, that price starts to ride the band and then eventually fail. Because what do we know? That all price action happens within 3 standard deviations, right? But 95% of that happens within 2, right? And 99.97 happens within 3. So I've got a couple different VWAPs that I have from my mentor that have 3 standard deviations and all that stuff, but it's not needed. 2 is good enough. So this will give you a quick idea for, hey, we're riding that upper deviation band while we are in a, actually, let's look at Fubo, because that's what we've been looking at all day. I don't know why that went to PLTR. There we go. Let's change that one more time to a little bit brighter red. Actually, let's just go pink. There we go. You can see that better. So we can see on our J hook, we break up and we ride that 3rd standard deviation all the way up. So that is a good trend indicator to tell you that, like, okay, if we start to roll from here and break down and make, if we break the lows, or actually if we break the last previous swing high and put in lows under that, we should start to look to roll over. We're going to start rolling over, right? But look at how it rides that deviation band all the way up. I mean, all the way up until it doesn't. And that's a cue. That is a hint right there that, okay, price flagged down, started to move back up again, but now we're lacking a little momentum. Okay. And price, what is price starting to do? Price is starting to diverge from, I'm sorry, volume is starting to diverge from what price is doing right there. So that is a hint right there. We're moved off the second standard deviation. There's space now between it, showing you that momentum is not as strong, and volume is actually starting to decline on that up push. So that right there can be a signal to, hey, I want to look at maybe getting out soon. Okay. So that's how that works. You can turn these deviations off by simply setting that setting to 0. Apply. And then all you'll have is just the simple standard deviation, or I'm sorry, the simple VWAP of the day. Now, I mix that with the standard deviation channel because it gives me more angular context through the day for the pullbacks, right? And the different areas where price moves in and out. And it just gives me a better, tells me a better story about what price is doing on the day. I'm going to take a drink of my coffee real quick. Sorry. So what I've done is mixed that standard deviation channel with intraday and multi-day VWAP and come up with a system from there. You can start with intraday and the channel, and I'm sure that you would have a really um, great basis, a great foundation. Now, when you're adding that channel, I'm going to tell you how to add it real quick. That's the same thing. Do you know, Diane, do you know how to import study? So I gave you that link. Do you know how to get that in? Okay, great. Perfect. So I'm going to pull that up again, and I'm going to show you what you need to do with that. Because if you just add it to a flat chart, you're going to get probably, you're going to get some compression on your candles. You're going to get a little bit of compression maybe. And what you can do to turn that off after you've added the study. And that's a great, look at Fubo too, right up to the 3 standard deviation that we were talking about earlier. And just instantly rejects, you know. That still blows my mind every time. It never gets old. After you add the channel, Diane, you'll go into your gear icon at the top of the bar, right? You'll click it. And me personally, I have highlight studies on hover. I have that unchecked. So I have it turned off because it drives me crazy when I roll over everything and it changes colors, high and low. And then I go to price access and I have it set to auto. So it auto sets the access and I have everything turned off. Your fit studies icon will probably be checked. And if it is not, then totally disregard this. But if it is, then uncheck that and hit apply and okay. And then what you'll get is you'll get the expanded scale of the chart. It won't compress your candles down tight. It'll give you the full range. Now you will have to kind of zoom in here and there because you'll get a bigger view. But over the long run, I like this layout better because you get more of the chart on the page. So all right. Are you entering into the spreadsheets only trades you've taken, or if you see them, I'm studying charts later. Hala, I am entering the trades that I am seeing. So, and I'm actively taking the J hook setup right now, but that is the whole reason that we're data mining is to get a safe statistical edge over the J hook setup. So for now, I would say it's probably better until you have maybe 100 samples. It's probably better to not take the trade and just to maybe flip through 5 or 10 charts a night. And if you see them, log them. And then after you've logged them and you've got at least 100 inputs, 100 samples, then do your analyze data stuff and start to find the averages. And maybe we'll do another one down the road after we've got 100 samples logged, and we'll go through and we'll do the analyzing of the data, and we'll do an analyze and we'll do a playbook setup. Okay. But yeah, so for now, I would say if you're not familiar with the pattern already, then just look for them and log the ones you see. It's super important that you screenshot and save those charts though, so you can reference back to those. And get creative with it. Mark the chart up, do the drawings, act like you're taking the trade, so you can get good, solid data. And if it fails, log it. You need to know that stuff. Don't cherry pick only the best ones that run $5. So today is recorded, Diane. Now you just made me nervous right there. I had to look over and like, oh my God, did I click record? I clicked record and the mic is live. I did that the other day where I didn't record or have the mic on. It drove me insane. The mic is on, yes, and it is recording. I will talk to Dan and I will have Angel upload this to the site and it will be recorded or it will be on there to rewatch. No, you're fine. It happened the other day and Dan's like, hey buddy, are you in the pro trading room? I'm like, yeah, bro. He's like, I definitely can't hear you. And I was like, no. So, um, I'm looking over my notes. I don't really see anything else. You guys have any more questions? Been on here been going for a while, so. And this is, this is for everything. This is for any setup, anything that you see that you want to track, those are just the good foundational ones. I can't stress it enough though, guys. Just keep it simple. Get the core tenets of the play and, just keep it simple because you will get overwhelmed. Thanks, Diane. I appreciate it. Yeah, I love doing this stuff. I was bummed that I couldn't do the last 2 Saturdays. We had stuff going on with the family and Easter and all that stuff. So the last couple Saturdays we couldn't do it, but I'm back to it now and everything's back to normal. So okay, well, I guess I will wrap it up then. I appreciate you. I appreciate everybody that sat in with me today. It was awesome. I'm glad that we got to do this because this got me off my butt and finally got this spreadsheet started for the JHook setup, and I am now accountable to all of you guys to track this and get some good info on it. So I appreciate it, everyone. Have a great Saturday. If you have any questions or anything like that, feel free to DM me. I'm always around, and I will talk to Dan and we'll get this session uploaded, okay? Talk to you guys later.